Good afternoon, everybody, and welcome to Tech Talk here at MarketStream.live. I'm Joe Cusick from the Cusick Group, securities offered by MoneyBlock, where we marry the looks at technical charts and option pricing and kind of give you a feel of what's been going on with underlyings and what's being forecasted as potential movement going into the future for these underlyings. Now, with that being said, the major indices today, they've been holding up just fine. We saw the opening dip, and they've been basically trading mostly a bullish bias. The most notable one that's been just slightly in the red has been the small caps, the Russell 2000, but the Dow Jones, the NASDAQ, and the S&Ps have all been in the green into this afternoon's trade. So with that being said, I wanted to take some time talking about something that's been in the headlines we've talked about. I've gotten a couple emails on, Joe, talk about oil and do it in terms of tech talk. And I said, great, why not? So you've seen that the general market has actually held up quite well with what's been basically a very volatile trade in oil. As a matter of fact, oil prices right now have dropped to around $45.36, which is down about $1.72 or 3.7% with these continued OPEC headlines. We talked about this last week when they had a technical meeting, and then that preempted the final meeting that they are supposed to have in Vienna. That's supposed to end either overnight or into the early morning session. So stay tuned tomorrow morning in the overnight action report. Join us, 8:30 Eastern time. But people are like, OPEC. Okay, first of all, OPEC is just an acronym for an organization of the petroleum exporting countries. Now, the initial countries that were in OPEC when it was formed, which was in 1960, was Iran, Iraq, Saudi Arabia, Kuwait, and Venezuela. These were the founding members of the organization. Then we had Saudi Arabia join, and then basically 10 other countries. Now, Saudi Arabia, basically, they're about 32% of the total OPEC production. Roughly, if you look at the current numbers into October, that's about 10.62 billion barrels per day, 10.625 million barrels per day. Now, that is down, when we looked at that October number, down about 25,000 barrels comparative to September, and we had a record high production level in July. To put this in context, when I started talking about how Iran, Iraq, Venezuela, Indonesia were pulling back from this table in this negotiation, that basically was about the other 32%. Now, we've heard that Russia was also walking away from the table, and we also heard that Saudi Arabia wasn't actively participating as well. These 14 nations basically have, since 2014, been talking about production cuts, and they haven't done anything that's been notable. So to expect that anything different is going to come out of this meeting, I don't think so. But that's just conjecture. That's my thoughts. What are the charts telling us, and what are the options in the oil, both ETF and the oil futures, telling us? Well, first of all, the oil ETF that you can take a look at is USO. If you don't have access to futures, if you don't trade futures, USO is the ETF that will track a strip of different oil futures as well as forwards. They combine that into a vehicle. That's USO. USO is trading at $10.08. It's down about 36 cents today, or around 3.4%. Now, when I looked at the options that were expiring at the end of this week, they were pricing in the potential for USO to either go up or down into Friday's expiration of around 75 cents. All right, so you're looking at almost another 7.5% move going into Friday's expiration. As a matter of fact, going into the expiration for the weeklies that are expiring on December 9th, they're pricing in the potential for the underlying USO to move almost 10%. So there's quite a bit of volatility that's built up. Now, where are the simple moving averages that I use and have talked about in Tech Talk? Well, first of all, the 20-day moving average. Why do we look at that one? 20-day moving average gives you a good idea of trend. It's just really a trading mechanism. It's a shorter term moving average, but it gives you an idea of trend. Right now, the 20-day moving average comes in at $10.25. So it's above where the stock is trading right now. Not only is that telling us that the current trend to the downside does have some validity, it's also showing us where short-term resistance is. Taking a look at the 50-day moving average, I call that more of an institutional moving average. Once an underlying goes below or above this moving average, that tells me whether institutions are happy with the underlying or the current trend and their positioning, or there's some negativity and institutions really aren't going to be participating at these levels. The 50-day moving average comes in at $10.76 on USO. And finally, the 200-day moving average, which I use as long-term support, that's at $10.65. So you can clearly see that oil has been under a lot of pressure. Now it has sliced through all of these moving averages and has some work to do to get to the upside. In other words, it's going to need some sort of catalyst. One of those catalysts might be that we actually do overnight or in the early morning session get news out that they do come out with production cuts. But again, the underlying is pricing in the potential between now and Friday to move 75 cents. That would basically get you to around $10 and almost $10.90 is where it's going to get you, which would again be above all of these moving averages. That would have to be a pretty significant move, 7.5%. Volatility is really running high. It's in the upper 2/3 of its rank. If you look at the last 52 weeks of implied volatility, it's basically telling us with the weeklies running at a 92 implied volatility, that's in the upper level of its implied vol. What does that mean for you non-implied involved enthusiasts? It just means that there is a heightened expectation of potential violent moves either up or down by options traders in USO. Now, if we take a look at the crude futures contract that is going to expire in January, in other words, in another 16 days, it's trading at 45.35, down $1.73 or 3.6%. Now, if you look at the futures and the futures options, they're pricing in the potential over the next 16 days for crude to be either up 5.28 or down 5.28. So we have quite a bit of vol in there. The 20-day moving average comes in at 46.10. The 50-day moving average comes in at 47.14, and the 200-day moving average comes in at 48.27. So you see that this week, when we were trading in that $47 level, that's where institutions might have gotten a little bit more interest if it could have held above that mark, and if we could have seen that 20-day moving average slice through and get above that 50-day. So in other words, the underlying is trading between the 20 and 50-day moving averages. That could be an area where institutions, where the real big money comes in and potentially tries to press it up and get it to challenge longer-term support at 48.27 with the 200-day moving average. Those are the areas that we're going to be looking at for oil as far as a catalyst to the upside. As far as downside, right now, the trend is to the downside. And unless there's some other catalyst, which one notable one might also be not only the headlines out of Vienna and the OPEC nations, but we do have an EIA report where we're going to watch whether or not there was a draw or build of the crude oil contract in Cushing. We're going to keep an eye on that. That's typically out at 10:30 Eastern Time, and we'll talk more about that tonight on the closing bell, as well as we'll talk about it in the overnight action and what's hot on the open tomorrow. That's at 4:30 Eastern Time today on the closing bell, 8:30 Eastern Time on the overnight action, and 9:30 Eastern Time on what's hot on the open. Please join us here at MarketStream.live, and we'll see you in an hour. Take care.